Let's move on and get a check on the markets for this week, and we're almost 2 weeks out since severe weather brought destruction to Iowa farms. So, are the market reactions we're seeing in response to that, or something else? Plus, what does the lower US dollar mean for our export market? I spoke with analyst Elaine Kub about that and more this week, but I began by getting an update on crop conditions.
By and large, it's favorable. There are certainly areas where we're going to have record large yields. You know, the DTN digital crop tour that they had recently is looking at record high yields in Indiana, for instance, above 190. Here in the Dakotas, certainly there's individual fields that have problems, but again, a lot of people are going to be seeing record yields. And so this is a fairly normal year where you're just going to have some pockets somewhere that do have problems. It just happens that in 2020, that one pocket is the absolute smack dab middle of Iowa, which tends to get a lot of air in the press.
And speaking of Iowa, we're coming up on 2 weeks since that severe weather event across Iowa, Illinois, a couple other states. And Iowa's Ag Secretary said about 8.2 million acres of corn and 5.6 million acres of soybeans may have been affected by the storm. And of course, affected, that means different things to different people. But what has been the market's reaction to all of this?
You are so right, Troy, to point out that affected does not mean gone. So if you have 8 million acres of corn affected, that does not mean that yield is going to be a zero. It's just going to be a problem to harvest, most likely, and perhaps later test weights if the ears don't fill correctly. But the market did react. We have seen the timing of it. We've seen, a 23-cent rally in corn since August 11th. So that's like a 7% gain on the new crop contract. Now, I think it's a little more difficult to pin that entirely on this derecho effect. At the same time, you're also seeing dry weather building not only in Iowa, but certainly in eastern Nebraska too. If you look at the mid-August drought monitor, there's sort of moderate drought in a lot of places across the Corn Belt. And this is the time of year when soybeans are most desperate to receive some of that August rain and get that pod fill. So we're also seeing a market influence on soybean prices have actually raised about 5% since that August 11th date.
And you mentioned our rally. Kind of put that in perspective for us in terms of how big of a deal that is and how unusual it is for this time of year.
Well, it seems to be a bigger deal, I think, or more important on the soybean chart than on the corn chart. Soybeans at 9.15 is the best price we've seen for them since March. So this might actually be a price that could be motivating some marketing decisions. Corn at 3.40 is basically just bouncing along inside that range that we've been slogging through since April. So, it was a nice rally that we've seen since August 11th, but it may not be enough to really change anyone's outlook on that market. It is a little bit unusual to see this in August. I've been watching the trading volumes of these contracts, and we usually do not see trading volumes this high in August, the daily trading. And part of that actually might be related to funds that are not on vacation in August. A lot of time you see the markets just sort of take a break in August, but this year, because of the coronavirus or whatever, we are actually seeing, more activity in the stock market and everywhere. There just seems to be a lot more going on. And certainly we have this headline-driven trading for the ag markets that I think has helped boost some of that attention to these prices.
Elaine, when we spoke earlier this week, when we were preparing for this interview, you mentioned the lower US dollar. So has that been making us more competitive in the export market, or does the dollar need to get to a certain point before we really notice a difference?
No, the dollar has been hugely influential, and it's impossible, again, to sort of sort out how much of this rally has been due to the dollar versus the derecho versus the dry weather. We'll never know, but the dollar has been sliding lower since July 1st, and the big place where we see that impact is in soybean export sales. I saw just another announcement of 192,000 metric tons sold to China again this week. So that's great, and the dollar is helping that because we're seeing the soybean prices at the port in Brazil is about 6% higher than our prices here at the US Gulf. So we're very competitive, and we're the ones that have the beans right now, or certainly China knows that we are the ones that are going to have extra or plenty of beans as harvest progresses in the Delta.
And yeah, on the subject of harvest, what's your advice for that farmer who has crop to move before harvest time?
Yeah, I mean, you have to sort of think about what are what's the opportunity that you are going to be giving up if you move wheat, for instance. Let's say you've got wheat in a bin in Nebraska, and do you want to get rid of that before you put the new crop corn in? There's about 30 cents of carry to hold that wheat until May, but actually there's 20 cents of carry to hold new crop corn from December through May. So I think the better opportunity right now is to get those bins cleaned out for the corn. Soybeans, there is carry. It suggests that storing it is an option this year, unlike a lot of years. But your best bet is probably going to get that storage facility available for corn. And I realize that's going to be a big struggle for folks that are suffering damage from that derecho storm. There will be more bagging this year. There will be storage problems, but the market, I'm sure, will work through it.
And Elaine, before we let you go, do you have any final marketing or risk management advice that you'd like to leave us with today?
Yeah, I just hope that folks don't get too extra bullish, because we do have the dry weather, we do have the derecho damage, and some of that certainly sounds bullish to supply, but remember that we are already sitting on, very large, comfortable ending stocks, large stocks to use ratios. I don't think that this damage has been enough to get the market, looking at record high prices or much more of a rally than we've already seen.